Where did you?
Silver Price Forecast 2020. Silver's time to shine? Silver Price Forecast 2020 shines, but upside depends on business cycle. My Silver Price Forecast 2020 is forging higher, based on strong positive catalysts. I'll highlight 3 catalysts that are working in silver's favor and present an end destination forecast. The running of the silver bulls is close at hand. Before I move forward with my reasoning for higher silver prices, let's get some of the not-so-positive news out of the way. Similar to my gold price forecast for the next 10 years, silver's near-term fundamentals are somewhat mixed. The economy is growing at what can best be described as a moderate pace. But this moderate growth is much less than the gross domestic product (GDP) trend growth in previous business cycles, which reduces consumer demand somewhat. Tepid consumer demand usually results in lower industrial end-use demand, which works to cap prices. Like gold, silver's precious metal qualities have been subdued in recent times. Soaring equity prices and record low volatility have curtailed the wall of worry for now. But those dynamics should change over time. Another round of extreme monetary easing, combined with a geopolitical firestorm, could make risk premiums a factor once again. 3 catalysts for silver prices to rise. With the silver price per ounce hovering between $14–21/oz. Since July 2014, silver has been an underperforming asset. Like gold, silver can't seem to catch lasting momentum in either direction. For investors with short-term horizons, the price action is bound to frustrate. That being said, I believe that certain factors will work in silver's favor. Silver's price action is historically cyclical. As such, timing the entries is critically important. I believe that the time is coming, however, when silver should be over-allocated into individual portfolios. Here are 3 reasons. 1. No growth in silver supplies. According to the U.S. Geological Survey, America only produced 470,000 ounces of silver in the first 5 months of 2017. A year ago, it was 482,000 ounces. Lower supplies aren't just an American anomaly. It's happening throughout the world. Total silver supply decreased by 32.6 million ounces in 2016, led by an 11% drop in demand. Perhaps shockingly, Mexico registered the largest decline in production last year, followed by Australia and Argentina. Mexico is traditionally the largest silver producer in the world. Leading the charge to cut back production are the big silver producers, who have little incentive to find more supply. Typical all-in sustaining costs (AISC) in the sector are around $10–14/oz. So many producers aren't making much money with silver prices stuck in the mid-teens. The only thing that will incentivize exploration is a higher spot price. I predict that this can happen at the advent of a new business cycle when prices and industrial demand ramp up in conjunction with one another. 2. Technological demand. The winds of change regarding industrial silver demand are blowing. Industrial demand is falling in some traditionally strong areas, like electronic appliances and photography. This has certainly hampered the demand curve in a significant way. But new industries are emerging that could ramp up demand to a higher plateau. Purchases from the photovoltaic industry jumped 34% in 2016, driven by a 49% increase in solar panel installations. The amount of silver consumed totaled 76.6 million ounces, which was the highest amount since 2010. The number of global solar panel installations increased exponentially as well. Driven largely Chinese and American growth, installations climbed 126% and 95%, respectively. Whether the increase in new tech can fully make up for the losses in traditional industrial silver demand remains to be seen. The photovoltaic industry, while not new, still offers plenty of mainstream adoption upside. 3. Increasing investment demand. Retail investment demand has played a huge part in silver's run from $10/oz to $50/oz since the U.S. housing bubble. Back then, the U.S. Mint was regularly selling out of Silver Eagle coins, and shipments from bullion dealers were delayed for weeks on end. Retail investors couldn't get enough. The massive stimulus and balance sheet expansion undertaken by the Federal Reserve spooked investors and sent the US dollar lower. Over time, however, investment demand waned as the US economy gained traction. So much so that, by 2016, silver coin and metals fabrication fell by 9% from the 2015 record highs. Total physical demand fell by 11%, tumbling on weak jewelry, silverware and retail investment. After profound resilience by retail investors up until 2015, investors finally threw in the towel. Risk assets have won the battle against silver for now, but I don't expect that will last. Similar to the 2009 to 2011 period, the silver price outlook in the future will rebound once a new business cycle comes to pass. Why? Because once the recession hits, the Federal Reserve will likely jump the shark and stimulate the economy even more than in 2008. It has to, as it takes an ever-increasing amount of fiat currency to produce a similar effect on the economy. If investors were fearful of the fiscal condition of Uncle Sam in 2008, wait until the next recession hits. The next one is likely to be global in nature, as most countries are subsidizing consumer demand through low interest rates. Low interest rates are possible through central bank bond purchases, which blows up their balance sheets. Low interest rates also cause sovereign nations to borrow more than is fiscally responsible. Bottom line, expect silver investment demand to return with a vengeance. The hemorrhaging silver supply will act to support prices. Silver price forecast 2020. Silver price predictions for 2020 have as much to do with timing as anything else. If, somehow, the current U.S. business cycle doesn't slip into a recession and is still expanding by 2020, the silver price forecast will be subdued. However, if a recession takes hold, like I expect it will by the end of 2019, the sky's the limit for silver prices. A U.S. recession will trigger the Federal Reserve to act, creating another round of stimulus and monetary dilution. Stock markets will likely plunge, turning silver investment outflows into inflows. There will likely be panic and concern about the viability of the US dollar, as America's deficit soars. Whether the US dollar declines right away is an open question. Sometimes the dollar strengthens during periods of crisis, but it could easily be abandoned this time around. For the first time since Richard Nixon completely broke away from the gold standard, the dollar's reserve currency status is under threat. China and Russia have announced a bilateral agreement to conduct trade in rubles and yuan. Iran vowed to ditch the dollar in response to Trump's Muslim ban. Venezuela is actively pursuing the same policies. I have no doubt that more countries will seek to end this hegemony. Obviously, a crashing US dollar would help boost silver prices in direct proportion to the strength of the decline. The silver price forecast 2020 has moderate reliance on the arrival of a weaker US dollar. Expected silver price in 2020. Working on the following three assumptions, I expect silver prices to soar. A recession will have come by 2020. Stimulus measures undertaken by the U.S. government and the Federal Reserve will match or exceed those undertaken post-U.S. housing bubble, and technological demand will fill or exceed the gap left by losses in traditional industrial demand. I have an initial $50 price target, roughly matching the previous highs experienced in 2011. From there, I will reevaluate the target as silver fundamentals change. Silver price chart. Keep in mind, the position of the post-recession recovery matters. If the economic expansion is still grinding upward in next decade, the silver price forecast 2020 may be delayed. Silver is likely to take off near the end of the recession when investor fear is highest and industrial demand is on the cusp of turning. If the past two post-recession moves in silver prices are any indication, my price target may prove to be conservative. How about some silver price predictions for the next decade? I'll pass. There's not enough visibility to ponder that question. I'll have a better feel for supply, new demand, and investment demand dynamics once this amazingly long but weak U.S. business cycle finally ends. Silver prices setting up to soar 1,300%. 3 charts investors must watch. These three charts say silver prices could skyrocket. Silver prices could be on the cusp of showing massive returns. Don't buy into the negativity that hovers around the gray precious metal these days. Investors need to pay attention to three charts. They are screaming, silver could be the next big trade. S&P 500 and silver correlation calls for possible 1,300% increase. First, look at the correlation between the S&P 500 and silver prices. It's very powerful, to say the least. In the chart below, you will notice that, whenever the correlation between the S&P 500 and the precious metal hits almost negative, there's a strong bottom in place. The last time we saw something like what we are seeing now was between 1991 and 1993. In the midst of it all, we saw a bottom made. After this, we saw a bull run begin and silver prices reach close to $50. That was an increase of roughly 1,300%. If we see this sort of move happen again, silver prices could reach beyond $200 an ounce. Gold to silver ratio suggests 66% rise possible. The second thing that investors need to pay attention to is the gold to silver ratio. At its core, this ratio essentially says how many ounces of silver it takes to buy 1 ounce of gold. Usually, this ratio is used to examine silver's value. If the ratio is too low, prices may be too high. If the ratio is high, silver prices are considered to be cheap. Please look at the chart below, and pay close attention to the highlighted area. Over the last 20 years, there has been a pattern on the gold to silver ratio chart. When the ratio reaches the 80 area, it drops and goes to as low as 45. Not too long ago, this ratio hit slightly above 80 and has since declined. This is bullish for silver prices. If we assume that this ratio hits 45, and gold prices remain around the $1,250 level, silver prices could reach $27.77. This would mean an increase of 66% from where it currently stands. Mexican peso and silver correlation telling something powerful. Lastly, pay attention to the correlation between silver prices and the Mexican peso. Why the peso and silver? Mexico is the biggest silver-producing country, and the correlation between the currency and silver shows something very powerful. Please see the chart below. Whenever the correlation between silver prices and the Mexican peso hits above 0.6, we see a bottom forming. This happened in 2002 and 2008. After both of these times, silver had a solid run to the upside. The correlation between silver and the Mexican peso stands at that level again. Are we seeing a bottom in the making? Know this, the last 2 times that the precious metal formed a bottom, silver prices increased by several times in the following few years. Silver prices outlook, all bases loaded, $50 possible? Dear reader, the charts above make me more bullish on silver than ever before. My forecast for a while has been $50 silver. I still stick to it, and I believe it could happen sooner than later. When will silver prices start to move higher? This is very difficult to predict, and if anyone claims to be able to tell you the exact time, be very careful. Here's what I see: the longer that the gray precious metal remains low, the bigger and the more violent the upside could be.